Hi guys, this is Rahul and let's begin with the weekly analysis for the Indian stock market for this week. First of all, apologies that we could not release a video on Friday last week. We had some technical difficulties, internet issues, a lot of internet connection not working, so we could not. But anyways, let's begin with today's analysis. Now for this video today, we will be discussing only Nifty and Bank Nifty. We will not be getting into the sectors because overall the view is that the market is in a downward trend because of the panic selling of coronavirus, right? And due to this, all the stocks are going to be behaving the same way. So Nifty and Bank Nifty, once you understand these, you know that you can expect the same movement from the other stocks as well. All right, so I'll be doing a technical analysis on Nifty first, understanding the levels, what we can expect from the market, and then we will move to Bank Nifty. So starting with Nifty, you can see this is the Nifty weekly chart. All right, we can see last week the movement was huge, all the way from 10,766. That was already a gap down opening, and then to a low of 8,566. So what can we expect now? Can we expect the market to continue to fall? Where should the market stop? Should we buy? Should we sell? Let's understand all these things. So what I would like to do is first start on the monthly chart. Okay, we are going to first see the previous impulsive move. You can see this is the start of the last impulsive move in January 2016 from the price of the low of 6,820. All right, and from there until January 2020, that is 4 years, we were in a very strong uptrend and we reached a high of 12,463. All right, now if you see on the monthly chart, those who have taken a course with us or those who are good at candlesticks can see we have a reversal candlestick right at the top here, okay, on the month of Jan 2020, and after that we see in just 2 months we have seen a huge fall, which basically is not a change of direction. This is a pullback and it has reached the 61.8% level, which means the golden ratio. So we are not expecting a further pullback, though it can reach 8,021 because that is also the psychological level. So that's the next support. All right, so these levels are important for us to understand what to expect. We have seen a huge retracement. Now let's go into lower time frame and see what the market says. This is the weekly chart. We can see last week was a bearish candle, but it was not a body dominating candle. The spike was bigger than the body itself. All right, that means that we are not very sure which side we are looking at because the body is not as big as it should be. So you see Friday the market actually pulled up and we have a green candle, which means a bullish candle, which is a body dominating candle, again bounce up from the support. Now today we have a bearish candle, which is also an inside bar. All right, so unless we see a high of Friday or low of Friday breaking, we don't have a clear direction. That's only on the basis of the daily chart. Now let's see what the hourly is saying and what we can really expect from the market in terms of its movement. Okay, we are using the extension tool, starting from the wave right at the top, the impulsive move, down to the low and back, just to see what are the extension targets. Now what we see is we have 127 extension at 7,426, which also is a Fibonacci level. All right, going back to the higher time frames, we see that the first level in between is 786 78.6%, and 8,021, which is also a psychological level. All right. So looking at the situation right now, obviously we're not looking at a jump up immediately. Anytime the market moves up is just a pullback right now, or a bounce. The actual correction which is happening on the downside should continue until 8,021 range. All right. So I'm expecting the price to at least spike till this psychological level. May not close here, it might just touch here and shoot up. Okay, that's the view for Nifty. So the idea would be that you again wait for a pullback and sell. Market could also be sideways right now, so we have to keep that in mind. If it does become sideways, the range would be again taking a sell from the resistance. All right, so important levels to keep in mind are what we see on the weekly chart, which are basically 9,626 should be a good resistance. If it crosses that, we can expect the price to even retrace until say about 10,000. All right, so 10,000 after the market crosses 9,620. On the downside, first support is at 8,964. Then the low of 8,571, and then the psychological level of 8,000. All right, so these are the numbers to keep in mind for Nifty for the next coming weeks. In terms of direction, it is still bearish, but you can see it is a vertical fall, which means that when the market does start to go up, it will also go up vertically. So the move up will also be very, very fast, but we don't have any confirmation on the move up yet. And at the same time, I'm expecting some sideways movement or a consolidation before the market starts to move up. All right, moving on to Bank Nifty. Similar view. So what we are going to be doing is we're just looking at the Fibonacci levels. The direction analysis almost remains the same, which means here again we are expecting the market to make a low, consolidate, and then go up. Here we see a retracement which is completed of 50%. Previous support or previous structure is at 20,606. You can see there were two swings here. All right, so this should be the next target. But obviously you have to keep in mind that if the market does do a pullback, what are the levels? So we have 25,194 as the first resistance, then we have 26,450, and on the downside we have 21,463, and then the low of 20,606. All right, so again here the strategy would be to wait for the pullback and sell at the resistance. If the market does go sideways, then we can look at a breakout and a buy. But I'm not looking for a buy right now. It could take a couple of weeks. So for the next few weeks, the strategy would be to sell after a pullback. Selling at the current price is definitely not advisable because you do not know whether the market will continue to open with a gap or it will bounce up. All right. So selling from the higher price is what we are expecting. Targets are still not yet met. There should be one more downward move, breaking the previous low, testing the lowest support. That means testing the support of 20,606, which is again a psychological support level. All right. Similarly on the stocks again, same view. So you can just correlate it with Nifty and Bank Nifty for now. All right. That's it for now, guys. I will see you again on the coming Friday. This is a very good time for the markets because you have a very good volatility, so you can make money from shorting and mostly from shorting right now. That's it for now. See you guys next week. Bye bye.